The Federal Reserve just confirmed softly that they're going to be lowering rates, which confirms that we're going to have an altcoin season very soon. And in this weekly macro update, I'm going to go over all the details, as well as per usual, give you guys my updated view on financial markets. So before we get started, none of this is financial advice. Let's jump straight into it. So usually I like to start with markets and the charts, but I'm going to flip it today and actually start with the Federal Reserve, because Jerome Powell, the Federal Reserve Chair, just gave his Jackson Hole speech on Friday. And this is what a lot of people are saying opened the door to an interest rate cut next month. So I want to go over a few points that makes me and everyone else, including the large banks that we're going to get into, think that we're going to have a rate cut in September and December. So the first thing was just the overall shift in tone with an easing bias easing rates. So he acknowledged the mountain risk on both fronts, a weakening job market and a still elevated inflation. Jerome Powell emphasized that with policy in restrictive territory and the balance of risk leaning toward economic slowing, a reduction in rates may warrant adjusting our policy stance. So financial markets seized on this opportunity as a clear nod to rates being cut here pretty soon. Number two was softening labor market signals. So he described labor conditions as a curious balance between supply and demand, and he warned that downside risks to employment could materialize quickly, raising concern about potential layoffs and unemployment. These elevated market expectations is calling for a rate relief aimed at protecting jobs. Number three is the inflation pressures highlighted but de-emphasized. So Jerome Powell did note that tariffs still present inflation risks, but he did suggest that the impact could be short-lived, unlikely to ignite a wage price spiral. Then he also emphasized that long-term inflation expectations remain anchored near the Fed's 2% target, right? So it's kind of like a flip from the last meeting. And then after that, markets responded instantly. Stocks rallied, treasury yields fell, and Fed futures swung dramatically as well. And then the expectations for a September rate cut soared to around 85 to 90%, up from roughly just 75% before he gave the speech. And I was talking about banks in the beginning. So you have Barclays, Deutsche Bank, and BNP Paribas echoing the sentiment, thinking that rates are going to be cut. So, like I said, they're forecasting rate cuts in September and December. And the next FOMC meeting is September 17th, if I remember correctly. A lot of people are wondering, hey, why the 180? Well, I think the dovish shift, like I've been talking about in the past few videos, comes amid mounting political pressure from the president, right? He had the Fed get audited. He called Jerome Powell stupid on Twitter and just been bashing him. He's been calling for rate cuts for a long time. And though Powell reaffirmed data-based decision-making, concerns are rising about potential political interference affecting the Fed's stance. So, I talked about, it was like 2 weeks ago, that for the first time since 1993, the Federal Reserve Chair's Board of Governors disagreed with him publicly. So Jerome Powell voted to keep rates the same, and they voted to cut them. So a lot of people think that the pressure is still just a lot. And in my opinion, I do still think we're going to get rate cuts in September, but I'm not going to say 100%, because you have to think, Jerome Powell, his term is up in May. So he still has almost like half a year to play hardball, right? It's not like he's trying to protect his term. He's about to be out in a second. So he could just go out guns blazing. It just depends on what his true intentions are. If he's being bribed, if he's really think he's doing what's best, or if he just wants to be a hard ass. I don't know the guy, but you want to look at it that way so you can prepare for every situation. All right, so now let's look at our other metrics that we typically go through. Got the fear and greed index at 43. Guys, this is so good. We are anticipating rate cuts. We got Bitcoin consolidating near all-time highs. We had Ethereum reach a new all-time high level. And we're still leaning towards the fear side. That means we have a lot of room for growth. A lot of room for growth. This is a really good sign. And this is turning out to be a very healthy bull market. If we look at the altcoin season index, you can still see that we're not even halfway into it. We're pretty far away from an altcoin season. And then if we look at the ETFs, after having, outflows of last week, remember I said it's going to be up and down, we're back on to having inflows with, just yesterday we had Bitcoin, we had a $220 million inflow, and Ethereum $443 million in inflows. So Ethereum ETF inflows are starting to outperform Bitcoin here on the 21st, which was my birthday, $337 in ETH ETF inflows and we had negative Bitcoin inflows, right? So we've been having larger Bitcoin ETF outflows than Ethereum and larger Ethereum ETF inflows. So people are selling more Bitcoin and buying more Ethereum simultaneously, which is showing, hey, altcoin season is around the corner, because what typically happens, and I say this on blue in the face, but I just want to make sure you guys get it. Money flows from Bitcoin to Ethereum. People take their profits from a Bitcoin and they put it into Ethereum. And we see that happening here because, Bitcoin is near all-time high. So people are taking those profits, putting them into ETH. ETH is going to pump. It's going to unlock lots of liquidity because most of the altcoins are built on Ethereum. And then that's going to cause an altcoin season as altcoins are able to pump from the new flow of liquidity. And if we go to look at our charts, you can see gold starting to top off. Institutions are starting to take a risk-on approach with rates being cut. Remember, rates have been rising for the past few years since, the global event that we had back in 2020. And when the Fed lowers or raise rates, they typically do it consistently. So they're not going to cut rates and then have them go up, or they might cut and pause, but the trend is typically in one direction for a consistent amount of time. So we can expect rate cuts for a little while, in my opinion, right? And that's just going to continue to make institutions take a risk-on approach and shift their portfolio from more investments like commodities and gold and precious metals and bonds to assets like stocks, assets like crypto, etc. And then I just want to touch on institutional adoption in crypto, because when you're thinking about any asset that you want to buy, you want to make sure that when you buy it, you can come up within your mind, like, who is going to buy this from me? Because that's the only way that prices are going to, continue to rise. And, I've been doing a lot of research, talking to a few people that, are institutional investors or know some institutional investors, just really milking my network. And what I found out is that institutional capital is excited to get in, but at the same time, it's like a bittersweet kind of thing. Because what happened was, like, when you're an institutional investor and, you're not a crypto hedge fund and you invest into other things and have been for a while, you have a board, you have an investment policy statement, you have, your asset allocation. And in order to be able to buy crypto, you have to convince your whole board, which takes a long time. You have people hired on to do this. And it was a lot of people that were going to get approval, and then once they finally got it, FTX happened, and then it just looked really, really bad, right? So a lot of them gave up. And then you had some that went and got approval. It took a long time, and then the prices dropped and went back up, and they totally missed the boat, right? So they are excited, but some of them have a bad taste in their mouth at the same time. And there are some institutional investors to where it can take years for them to just get approval to put in a small sliver in Bitcoin. So this is a bureaucratic, frictional risk that is going to take some time to unlock. So it's not just like, oh, the laws are in place, now institutional capital is going to flood in. These institutions have to convince people. They have to convince their board, who is typically, older guys who are used to how things have been working for the past, few decades, that, they still see crypto as risky. They have billions of dollars, so they don't care. And I'm talking about sovereign wealth funds, insurance companies, endowment funds, people who are managing pensions. They're multi-millionaires, sometimes billionaires. And when you have that kind of money, you're more so worried about protecting what you have versus what to gain, right? So the crypto market is still fairly small. It's not as liquid as the markets that they're used to. So there are still some frictional things in place that have to fall. And I think it's going to take 5 to 10 years. So that's not all bad. Like, it's bad in the sense that, a lot of people think we're going to have this altcoin season where all the institutions are going to get in at once. That's just not going to be the case. But it's also good because it's going to be like a domino effect, which means that's how the price is going to continue to rise over the next few decades. Those are the people and the companies that are going to be buying our bags because we're willing to take the risk now. Not just willing to take the risk, because some people are willing to take the risk. We have the bandwidth and are able to take the risk, basically, because we don't have these frictional things stopping us. All right, so going back to this, sorry for the little rant here. S&P 500 at all-time highs. I said they're expecting rates to be cut. Stock market pumps, crypto pumps as well, right? These are all risk-on assets. The Dow Jones, all-time highs. The NASDAQ, guess what? All-time highs. We got Apple pumping back up. We're back above our 200-day moving average, okay? Getting near all-time high levels. And if we look at Bitcoin, we just turned the previous all-time high resistance, it came up here to this $108,000 level, came all the way back down, came up, bounced off it again. Now we blew through it, and now we're retesting it as support. So if we already have a few weekly closes above it, right? And if we look at the daily, that's strong support right there. That looks really, really good, right? If we look at Ethereum, we officially hit all-time highs, guys, after we haven't been to these prices literally since November of 2021, right? We got all the way up to 4,960, almost 5K, right? So this was previous resistance. We blew through it. We tested it as support, right? Got a test here, and this is the weekly. We look on the daily, we got a test here, and now we're still trending upwards, creating higher highs and higher lows. I wouldn't be surprised if we came down here. Two things can happen. Multiple things can happen. These are my two scenarios. Markets could dip before the FOMC meeting. You know, you have a lot of leverage. The market makers are maybe trying to shake people out so that once the interest rate drop gets announced, then markets take off. Or it could be the buy the rumor, sell the news, and then it pump after. So rates could drop, and then markets could drop after that to try to scare people, and then markets pump after. I'm not sure what's going to happen, but I'm just pretty sure that we're going to have a altcoin season Q4, Q1, and I believe we will continue to see Ethereum chart into all-time high territory as we go into Q4 and Q1 as well. We look at the total crypto market cap. Remember, this was resistance. We blew up past it, and now we tested it as support here. We dropped a little bit, came back up, and now we're testing as support, and now we're back inside of our channel. So we're going to keep the hope is keep bouncing around inside this channel. We're on top of our 62. Our 62 is on top of our 200. Whenever that happens, markets are in bullish conditions, as you can see here. So everything is looking really, really good. Then we have the ETH to BTC ratio still looking really, really strong. If we look at it on the weekly, we can see the trend, right? Higher highs and higher lows. We want to get back up inside of this trend line here. Wouldn't be surprised if we test this as resistance and we came back down to this level, right? So right now, people are selling more Bitcoin than ETH and buying more ETH than Bitcoin, but I wouldn't be surprised if that trend changes for a small season before we continue to chart upward here. And lastly, guys, the Bitcoin dominance. We are looking good. We haven't got under our 62 EMA since the last altcoin season. Remember, these are the halvings. After the halving, typically 200 to 300 days after the halving, we have Bitcoin dominance drops, which means money flows from Bitcoin to other altcoins. Now, while this is mostly led by Ethereum, this is the first time since 2022, the 2021 cycle, where we had this dip go below our 62 EMA, right? First time. So now we want to see this cross. We want to see our 62 get above our 200-day, and we want to see this continue, because that means Bitcoin dominance is dropping and people are putting more money into altcoins. And I want to see this thing go low as it can possibly go, because that means our altcoins are going high as they possibly can, or not as they possibly can, but that just means they're going really, really high. So this is a really good sign, right? We have a break and we have a retest, and this is the weekly, guys. If I look at this on the daily, we had a break, retest, and remember, guys, we already got a cross on the daily. And like I said, when you're looking at when you're doing your multiple time frame analysis, the market is like a big ship, right? You look at a ship in the water and you see what direction it's going, but the captain could turn the steering wheel, which turns the rudder under the boat, but you won't see that ship turn for a while because it's so big, right? So looking at the large time frame, like the monthly, it hasn't even dipped below it yet, or 62, right? Like on here, you see it dip below it right here, but we haven't even seen it dip below. So the ship is still headed towards Bitcoin dominance is high. But you can see when you swim under that ship, which is the smaller time frames, and you look at the rudder, you can see things changing, right? On the weekly, we're below our 62. And on the daily, we're not just below our 62. Our 62 is below our 200-day moving average, which is our blue line. And if I go to the weekly, remember, on altcoin season, we have this 62, which is our orange line, on top of our 200, which is this blue line, right? The 200-day moving average is the average of the past 200 candles. And the 62 EMA is like rolling Fibonacci. It's the golden ratio zone. So we want to see this above the 200, this orange line on top of this blue line. And that is what happened in altcoin season. We saw it happen here too. Boom. So now on the weekly, it's not showing yet. On the daily, we just got across a few days ago, right? We just got across, and we haven't had a cross since we were in the last altcoin season years ago. Guys, this is huge, guys. Huge. And if we go down to the 4 hour, we can see the cross even more. So you can see that rudder has changed. Like the trend shift has already changed, but the ship just has to follow. All right. So hopefully that all makes sense. So with that, I like to conclude this video. Guys, it's time. The writing is on the wall. You know, like I said, I like to think in probabilities. What's most probable to happen is that we're going to get a rate cut. It's not guaranteed, but it's the most probable outcome. But in terms of altcoin season, it's just a matter of when, not if. The longer it gets prolonged, hey, the longer we get to yield firm and accumulate more high quality assets. But hey, I won't be tripping if it comes here pretty early because we've been ready for a while. All right. So with that, if you got value, like, comment, subscribe, share with a friend. But with that, I thank you so much for watching. I love every single one of you who tuned in, and I will see you next week for the next macro update. Take care and trade safe.